John Piper. Before you watch my video clip on why I think there's a major shorting opportunity coming in markets, I thought I'd better say a few words about myself. I've been trading for 25 years, and in 2006 I wrote a book called Financial Cataclysm Now. I've actually written 4 books on the market. The Way to Trade was my first book, sold about 20,000 copies. People really like that book, so recommend it. But basically, Financial Cataclysm Now I wrote in 2006. It foretold the big falls we saw, gave people who read it plenty of warning. And basically what I'm saying is, if you want this book for free, because I think we've just peaked again, I think this book is again going to be very relevant to what's going to happen in the next few years. My major support levels are 1616 on the Dow. That's, you heard that correctly, 1616 and 1515 on FTSE. So I'd like a free copy of this book. All you got to do, let me just tell you what to do. A free copy of the book, just email this address, tt101@aweber.com. Basically, that'll subscribe you to my free 101-part e-course, and the first part you get the free book. There's always an unsubscribe link, so feel free to unsubscribe if you wish to do so. Right, enough of me. I'm going on to the clip now, and thank you for listening to this brief introduction. Good morning, this is John Piper with the pre-trading weekend video clip, and it's Saturday the 30th of January. Maybe I was thinking I should rename this the crash report, but on the other hand we can never be absolutely sure what's going to have come next, so maybe that would be a mistake. Anyway, here is a chart of the FTSE weekly, just to reiterate what's happened and where we think we're going. We had this peak here, which was the bear market rally peak we saw in 2007. Impulsive decline here, well, that counts best as an ABC. Another ABC here, and I think the peak is in, as I've been saying. We've got a couple of key indicators here: the 200-week moving average, which FTSE's failed at, blipped up slightly but failed, and also the 61.8% retracement level, this line here, both of which FTSE blipped up above and has now fallen back again. So, as I said, I think the peak is in, and I think we're going to see a big decline. We're going to bounce at some point quite soon, I think now, a little bit up, but the move is just going to take us straight down, I think. So let's have a look at the shorter term action, just to reiterate what we've been seeing. Okay, here's a FTSE hourly chart. Now, we've got a 5-wave decline off the top. 1, 2, 3, 4, 5. That allowed me to, well, call a peak at that point, so we actually went short after this corrective rally came in. Well, in fact, we went short when there was a break below support here. Basically, there are 2 ways of trading, I think, or 2 main ways of trading. You either try and short the rally. If the rally is subnormal, it was pretty subnormal in this case, then I tend to short a breakout. So we went short actually on this breakout here around 54.50, with our stop above the peaks here. Because I use acceptance, in fact there was a slight penetration above the stop, but because I use the concept of acceptance, there is a time stop also, and the time spent above the level was not enough to trigger us out. I think about a 6-point move, lasted about 20 minutes, so we ignored it. So we're still short, and we caught this move down. So that was 1, and 2. We then had 1, 2, 3, 4, 5. That was wave 3. Okay, just for clarity, I've entered the 1, 2, 3. Now this 4th wave is a bit unusual, sort of almost an expanding triangle again. That's wave 4, and then we've seen this possible 5th wave. Now the 5th wave looks like it should have gone a little bit lower. We'll have a look at that in a bit more detail. Here's a 10-minute chart, and you'll see that this is the end of wave 4. So we had a 1, 2, 3, 4, and then the 5th wave should have gone a little bit lower. It didn't, so that was a bit of a failure. Nevertheless, the low could now be, and it's not that clear. The Dow failed again last night, so although there's a good case that we're close to a low, there's no confirmation it's actually in at this point. But certainly looking at the hourly chart, we have got this 1, and there's a regular 2, 3, and this sort of expanding triangle 4, quite a strange structure really, and then the 5. So although there may be a little bit of backing and filling to do here, we have got 5 waves down, so we've now got a bigger sell signal, and when the low comes in, which could come in Monday morning, Monday mornings are key trading times, we might then see a strong bounce coming in, maybe in 3 parts, maybe retracing quite a lot in fact. The big question mark is, do we take our 300 points of profit? I mean, I've been dwelling on this because often when you do see the first leg down, often the wave 2 is quite strong. You know, the bulls are far from convinced the bull market is over, albeit I call it a bear market rally. The bears aren't sure either because we haven't seen that corrective rally. So you can see a strong bounce. So you know, I'm in 2 minds here. We're looking to catch a very substantial move of maybe a number of thousands of points. My long-term support is 15.15, so we've got a potential 4,000 point profit on this move. May take some years, of course, but on the one hand, we don't want to blow that by grabbing 300 points. On the other hand, we don't want to lose our 300 points and then find that the market goes all the way up. So I'm actually tempted to say we should take some profits and then just put a stop beneath the low, get back in again, and that can be a bit of a nightmare in some ways. You can get sort of triggered short again, then the bounce comes in. So it's messing around with a long-term trade can be a mistake, and it's really down to your own personal trading style, to be perfectly honest. I'm not here to tell you how to trade as such. I'm here to help you how to trade. I'm here to offer guidance in what I think positions you should be positioned in. But when it comes to actual nitty-gritty of when you go long and short and whether you stay in position, this kind of thing, it's I'm not there every minute of the day to offer you guidance. You really need to have your own rules and formulated on that. Anyway, we're short, well in profit, close to a low, and I mean, yes, I'm certainly verging to the idea of taking some profit at this point. Let's have a look at the Dow now. Okay, here's a weekly chart of the Dow. Now, the key point here is that the peak here is an all-time peak. As in the 1929 crash, Elliott himself labelled the actual high as an unorthodox top, and the same goes here. I think this is the unorthodox top, and the orthodox top on the Dow came in the year 2000. It's not hugely relevant. I mean, it's not irrelevant either, in fact. But we've still got the impulsive decline. Again, it counts best as an ABC, mainly because this here looks like an ABC. So as does that says AB. Then we've got these 5 waves down. Actually, let me just reiterate that. Sometimes these counts can get a bit. You could say it's 1, then 2, then 1, 2, 5 waves down, 3, 4, and then the other 3 and 4. So it can be counted as a 5, in fact, but it's also possibly an ABC. It's not too critical at this point. I mean, it's certainly impulsive. Impulsive decline there, ABC here, and the key signal here is quite interesting on the Dow. We'll just switch to a slightly shorter term chart. Yeah, here's a daily chart. We had this expanding triangle, and having had a good move into it, I was looking for a good move out of it, but we just got this very feeble move, which has failed. Now, failures are very strong signals, often stronger than true breakouts. So I mean, we had a true breakout of sorts, but it went nowhere. We then got the failure. It went back into the triangle, and now blipped below it. And in fact, the upper parameter of the expanding triangle has now become resistance for this move, which is critical. Now again, we've got the 61.8% and pound dollar, but not a huge amount happening. All the pound is falling back, and it's already into our 10th minute. We ought to perhaps desist. So I hope you found that interesting and useful, and I'm back with the Tuesday morning report for subscribers, and of course there'll be another weekend video clip next week. Thank you very much for listening.